Welcome back. Big day today for earnings on Wall Street. We are just beginning the third quarter earnings season, and this morning we'll get reports from J.P. Morgan, Citigroup, Wells Fargo, all due out before the opening of trading. James Freeman is with us this morning, and James, you've written a lot about the banking sector. What are you expecting this quarter after all of these quarters where these stocks have been down because of regulation and low interest rates?
Yeah, I think the same story. Earnings probably flat to down. Look, it's a bad economy, so banks tend to rise and fall. But then on top of that, you've got still this huge overhang of the Dodd-Frank reform passed 6 years ago, where banks, the politicians tell us they're safer now, but they also have less ability to earn money. And that's why the markets say they're not as safe, because they're not strong institutions that can weather a storm.
So, I mean, the financials, I guess, have not been getting killed the way healthcare has been getting killed. I mean, when you look at the trading over the last couple of weeks, there was a feeling on Wall Street that maybe we would see a Democratic sweep, President, House, Senate. As a result, the healthcare stocks get creamed, but the financials didn't. That was interesting to me.
It is interesting. They've had relatively better trading results, I think you'll see this quarter. But we just heard from the Fed yesterday, business loans are down. So it's part of the sluggish environment, and especially on banks, been limited to a lot of ways they can make money. I don't think you're going to see any great news here. And what's also going to be really interesting is Wells Fargo. That scandal has been a big media event, a big political event. Obviously, it's hit the stock price. I think you're going to see, in terms of the costs of that, in terms of the bank's bottom line, probably not much.
Also, but the banks are already pretty much public utilities in terms of the level of regulation on them. And they answer to the Federal Reserve and the likes of Elizabeth Warren as to everything that they do with their capital. That some guy in Washington has to sign off on it, number one.
Or the guy with an office at the bank. Right. The regulators have offices at the bank.
And then just secondly, the banks are a pretty good gauge of consumers, the health of the U.S. consumer. We were talking about retail sales, but also, you know, there's been some strain in lower quality portfolio credit, auto loans and the like. Like, what does the world look like? What does the American consumer look like?
And I think you were talking about in that first segment, when are we going to talk about the issues in the campaign that affect the country? This is where you have a huge difference. Donald Trump saying repeal Dodd-Frank, let's move more toward free market in banking. Hillary Clinton essentially saying she's going to do the Obama plan and then some. More regulation, new taxes on investment, more aggressive enforcement, trying to throw bankers in jail.
She's getting up there and saying, I will take your money. Like during the debates, just flat out saying that. And people aren't paying attention to that as much as you think.
But that's not what she said in those private speeches she gave. So we don't know what Hillary Clinton, the financial industry, is
you know, she will say what she feels like the people listening at that time want her to.
Well, let's not forget Elizabeth Warren in her side, right? I mean, Elizabeth Warren is going to be pushing, and the Bernie Sanders supporters are going to be pushing her to go all the way to the left. What are they going to say about Wells Fargo CEO paid package? Okay, he's stepping down amid the company's phony account scandal, but now the reports this morning say that he's going to walk away with $130 million. I wonder what Elizabeth Warren has to say about that, and Hillary Clinton.
Elizabeth Warren would prefer to have his head on a pike, but I think that defend the indefensible, I know it looks bad, it seems like a lot of money, but I would say in his defense that the value of that bank grew by more than $100 billion while he was in charge. This money, these are basically vested stock ownership.
Yeah, so this is vested. This was promised to him a long time ago, is what you're saying.
And he earned it.
That's a very important point.
He gave up the unvested stock. He's not getting a severance package. This is basically money he already earned. And based on the financials of the bank, it's hard to argue with it.
Yeah, they're going to push the bank to go after it, though, and to claw it back, even though it's already vested, which opens up a Pandora's box of problems in terms of all executive compensation.
I don't think that's right. I mean, if you're had these promises, you know, over the years, and you have these options or restricted stock, but look at Senator Elizabeth Warren's tweet: a bank CEO should not be able to oversee a massive fraud and simply walk away to enjoy his millions in retirement.
Well, this is why her calling it a massive fraud is really misleading, because basically this was employees ripping off the bank. It was not a fraud by Wells Fargo. the bank did not benefit from these accounts being created falsely. They had to,
because their bonuses went up.
Yeah, they ended up paying out more bonuses than they would have to these employees.
Yeah.
And, you know, it's 1% of the employees each year they were firing for this in their retail bank.
Yep. It's a good point. Yeah, it's an important point. All right, we'll take a short break. When we come back, Donald Trump and Hillary Clinton clashing over faith.